Tom, what's your first strategy for our entrepreneurs to hear?
Well, I think number one is to recognize that any expense you have can be deductible. Okay, so what we have to remember is that the tax law, you are taxed on your net income. Okay, it's a net income tax. Now, for employees, it's not. It's a gross income tax because you're taxed on every dollar you earn. But for entrepreneurs, it's a net income tax, meaning that you earn the income, but any money that you spend back into your business, that you put back into your business, and as long as we meet certain tests, can be deductible, meaning that it reduces your taxes by whatever your tax rate is. So you earn $1 of income as an employee, you're going to pay, and you're in a 40% tax bracket, you're going to pay 40 cents on that $1 of income. But as an entrepreneur, if you earn $1 of income and then you have $1 of expenses, you're going to pay 0 taxes on that income because you use the money in the business. See, this goes back to our, Freedom Friday comment, which is, you have understanding that the government wants you to put your money back into your business. So then the question is, okay, so what does that mean? So what I get all the time is people will ask me, Tom, is this deductible? Is this deductible? And I want to help you rephrase the question. Okay, I think one of the things that entrepreneurs do really well is they come up with better questions. And the better entrepreneurs come up with the best questions, right? And the question, instead of is this deductible, is how do I make this deductible? And so there are 4 primary tests, and this is very important for everybody to understand. The first test is that the expense, there has to be a business purpose for the expense. And that's a pretty easy test to meet. That means there's some reason, business reason, that you're spending the money. But the next 2 tests are a little more difficult. The next one is it must be ordinary, meaning it's typical in your business. So let me give you an example. So let's say an insurance agent takes his best client to Hawaii because they're spending $150,000 in premiums a year, and so they take their best client to Las Vegas for a weekend in Las Vegas. That would be actually pretty typical, I find, among high earning insurance agents. They're going to do that kind of stuff. That's a sales technique that they do all the time. If your accountant takes you to Las Vegas, that's probably not typical for your accountant. Okay, it's remembering that CPA stands for cheapest people in America. That it's.
I was just going to say, come on, Tom, let's go to Vegas. Let's do it.
That's not typical. Okay, so it would not be it wouldn't be a typical expense for me, but it might be a typical expense for you. Okay, and then the third one is it's got to be necessary, and this is the most important one. This means that the purpose of the expense is to make you more money, right? That's the purpose of the expense. And here's what's great about the tax law. If you meet those first 3 tests, in other words, there's a business purpose, it's a typical or ordinary expense in your business, and it's going to make you more money. What's really going to be the outcome of spending that money? It's not that the outcome isn't going to be just that you reduce taxes. The outcome is going to be that you make more money. So the tax law actually encourages you, if you follow the tax law, you'll end up actually making more money than if you don't follow the tax law, because the tax law is actually there incentivizing you and giving you the instructions on how to make more money. Because the fourth item is very important, and that's documentation. Well, Anik, you've seen thousands of entrepreneurs, and you know that one of the things they struggle with the most is documenting their expenses, and whether that's in their bookkeeping or whether that's having receipts or whatever. But you also know that documentation is a really important part of business. Okay, if you can't document it, then it's not real. And if you think about the IRS, by the way, the IRS, if you pretend to document it, they will pretend to give you a deduction. Okay? you don't. The very first thing the IRS will look at if they audit you is your documentation. So you've got to document that, and it's a real receipt. By the way, your credit card statement does not do it for you. It's got to be an actual receipt, and you're going to write on the receipt. For example, let's give a big one. So one of the big deductions that people miss is meals. Okay, it's a huge deduction. Like you and I have talked about this one. It's meals. You for example, you go to dinner, say once a week, because we want it to be ordinary, right? Typical. Once a week, you take somebody to dinner to discuss business. Well, let's say that person you're taking to dinner is your spouse. Okay, but you're going to use that spouse as a sounding board, as somebody who's going to give you feedback that you might not otherwise get from an employee or somebody else. Okay, well, does that meet the test? Is there a business purpose? Yes. Is it typical that you might once a week take somebody to go to dinner with somebody or a lunch or whatever, and actually in a casual restaurant setting, get some of that feedback that you need? Yeah, of course, that's typical. Is it necessary? Is it going to make you money? Well, yeah, that's the whole point of the conversation, is to make you money. And then you just document it. Okay, so that's a really good example. Meals is a big one that people miss because they're not focused on what the meal's about. They're focused on, they go and have a good time, and they have a drink and all that, and that's fine. Just understand that if you don't have that business conversation, if that's not the purpose of the meal, it's not deductible. And if you want to have meals that aren't deductible, that's fine. But recognize that they could be deductible, right? So what can I do to make it deductible? And that's the key.
Thanks for listening to The Fighting Entrepreneur with your host, Anik Singal.